Daniel, are you in? Just write on Facebook. Okay. So I have my analysis on all pairs. I don't want to erase them, so I thought I'd use a pair I'm not trading. I know Pietro trades this, and so this is just write any questions you want along, and I'll try and answer. So this is a clean chart with all the data that the team Trading View gives us, and we're on the weekly. So I'd start doing just basic trend lines and support at the beginning. So I could see here some support, and I could do this thick line so that I know that it's from the weekly. Let's see here another one around there, and we could do this one, but this is very far away. It's not going to get here easily. Okay, so we have 3 lines. We could do then use like what Tom DeMarc's trend lines. Go here, go here. Go here, this go here. Okay, could go into the daily. Put this one here. Okay, and we can now try and let me start before going into waves, just trying to make you understand. Elliott Wave is made up of 5 waves and then 2 corrections. Corrections are, you can have 3 kinds of corrections. I can just go into them very fast. You could have, this would be a zigzag correction. This would be a flat correction. And this would be a triangle correction. Yeah, trend lines there. This would be going down. These would be going up. And this goes. This happens on any time frame, and each wave, each wave, impulse wave, and 1 would be an impulse, 3 would be an impulse, 5 would be an impulse, and then you have corrections. I'll write here. This would be an impulse. This would be an impulse. This would be an impulse. Then you have this correction, this correction, and this big correction. But inside of this big correction, you also have this one that would be an impulse, this would be a correction, and this would be an impulse. So if I show you Elliott wave, not to be drawing everything, this goes at infinitum. Let's see if there's a bigger. So yeah, Danielle. Yeah, I'll get into that. Just wait. Let me go all the way, and I'll talk about entries. So what I drew was this, basically 1, 2, 3, 4, 5 ABC, and I'd ask you to go into that, either see courses or read stuff, but this repeats. All this structure repeats on wave 1. So you have 1, 2, 3, 4, 5 ABC. Then on wave 3, 1, 2, 3, 4, 5 ABC, and so on. And you could have this. This could be a 1, 2, like you see here, 1, 2. But then it could also 1, 2, 3, 4, 5 ABC. And then on each wave, you could, it's fractal in nature. So, so what we would have would be 1, 2, 3, 4, 5 on the smaller. Time frame, and then ABC. Well, you get it. ABC, ABC. There is usually what they call usually wave 2 is a zigzag, would be like this. Wave 2 would be a zigzag correction. A, B, C. And wave 4 can be either a triangle or flat or a zigzag as well. But usually it's different from this one. And that's basically because of the psychology of the markets. So this could be A, B, C, like this. And why is that? You have the downtrend here. That's the other C, the other pattern, the wave structure that came before this. So if you have an ABC, it means that you have 5 waves down. 1, 2, 3, 4, 5. And what happens here many times is that people here have an ABC like this. I'll put here a channel. And they get here to the, imagine this ABC is bigger, so that it's easier to explain. Imagine that you're going short here, and you have this wave 1, and you think it's a correction of this downtrend. You don't think it's wave 1, you think it's a correction. That's when many people get trapped, because you get a correction, you get what's an impulse, but many traders that are short here think that this is just a correction, and when it starts doing the actual correction, they think, oh, okay, I'm good short, and that's when you get trapped. So wave 1 is hard to trade. Wave 3, it's easier to trade, and wave 5 it's easier to trade as well. These waves have Fibonacci ratios, or usually they have Fibonacci ratios. And I'll just erase this. And wave 2 generally retraces 61.8% of wave 1. So it could go down there. Wave 3 usually extends to the 1618, if you hear. Then wave 4 usually retraces less to the 38. Then wave 5, I usually just plan my exit at the 127 would be there. And then the books will tell you that the ABC corrections usually end around wave 4. And then again, you could also have the fib levels. So you could, if you have an A wave, you could expect wave B to retrace 61.8 and wave C to go to the 127 or 1618. And that here, Daniel, is where I usually see the AB equals CD movement. Also, you can see the AB equals CD movement here. It's ABC, but on harmonic patterns, it's ABCD. And you could also see an ABC here, ABCD here. On a larger time frame, all of this could retrace between the 38.2 and the 1.8. So you could have something like this. But if we do have this, and this is for you, Daniel, what does this look like? Yeah, it can be any kind of pattern. If it would end up a little higher, this would be a Gartley. It can be lower. You could also draw a pattern here. But they're just confirming the wave counts for me. They're just helping me confirm. Another thing we can do with is when you have wave 1 and wave 2, well, you get 2 points, and you can draw a channel here. And there are a few rules to Elliott waves. Basically, there are 3 rules. The first one is that wave 2 cannot go beyond the start of wave 1. So if this would go like this, it would invalidate. Sorry. The other rule is that wave 4 cannot overlap wave 1. And if we have wave 1 here, wave 4 has to be above it. But remember that you have these kinds of corrections. So you could actually have a triangle that goes beyond wave 1. You could actually have a triangle that goes like this. But wave 4 would be ending there. So you'll get that with time. But just first rule, wave 2 cannot go beyond wave 1. Wave 4 cannot overlap wave 1. Wave 2 cannot go beyond the start of wave 1. The end of wave 4 cannot overlap wave 1. And wave 3 can never be the shortest one. It could be the second, but it can never be the shortest one. And that's because of the psychology. If people are trapped here thinking it's a short, then when they figure out it's a long, this is when most people will take advantage of the movement. Wave 4 is usually kind of sideways when people are taking profits and other people are taking are going in, and it usually takes more time than wave 2. And then corrections, they can be very complex. You can have double complexions, like you can have a zigzag, then a flat, then a triangle, or two zigzags, or, well, you can have several corrections. And when I speak about corrections, it's not only this correction, it's this correction as well, and this correction as well. when I go into smaller time frames, I'll try and show you entries and exits and how I do them and how to mix it with volume. So if you have a channel here on a trend line on the start of wave 1 and then wave 2, and you pull it to wave 1, this break actually tells you, okay, we're in wave 3. So this confirms that you're in wave 3. And then when you have a confirmation you're in wave 3, you can actually do the opposite, do another channel on the tops of wave 1 and wave 2. Then sometimes this wave 5 will hit that target. And here it's not hidden because it's very compressed, but if I pull these lines, oh, well, sometimes this will do this. And then you have the correction where you could do another channel. And Daniel, these channels are going to be useful for entries. So you can have 3 channels. You can draw 3 channels. The first one is on the bottom or top if you're in the downtrend, using the start of wave 1 and the end of wave 2. The second one is using the top of wave 1 and the top of wave 3, and then pulling it down. And the third one is on corrections. And remember, if you have a correction here, if you have an ABC here, I'm going to erase this. This will be in itself a channel, and it also will help you enter this wave 5, and the same here. I'll do it on the chart on price in a minute. So if you have here an ABC, you have your channel, and you could have an entry there. If this correction is flat, like this one, your channel will be horizontal, and that's where I usually use volume. Thank you, Daniel. Well, let's go into the chart and try and see if we can do this. I have here below an awesome oscillator. It's the same as MACD or the same as Elliott Wave oscillator. I'll just put them here so you can see. You can I can put this one, I can put this one, and I can put this is not good. MACD. Okay. Well, these are all the same. You see the lines? The signal line is what is drawn here on all these. So you can either use the MACD 4C or use the MACD or the Elliott Wave oscillator or the awesome oscillator. This Elliott Wave doesn't give you this cross. I'm going to zoom in. The Elliott Wave Oscillator doesn't give you the line cross that many people use as an entry. Just this gives you a change in color. So they're basically the same. You can use either this. Well, these will help counting waves, as you'll see in a minute. So let's see where our chart is. Another thing to notice, yeah, Daniel, this awesome oscillator that's just the signal line of MACD with the difference in colors when the signal line crosses the moving average. This is going to help you tell you when you're in a wave 5 and when you're in a wave 3 and when you're in a correction. And this is the trick that I think no book will tell you. I've seen it on I think the first time I saw it was on a YouTube video, and it was an aha moment. Okay, Bruce, nice to meet you. Nice to I'm recording this for the first time. I don't know how it's going to turn out, but do you know Elliott Wave, Bruce? Just write on Facebook. Okay, I'll wait for an answer. So we're going to try and count the waves using just price action and waves. Okay, I see here there was a downtrend, and then we could start. We cannot go any further than this. Okay, Bruce. But we could say that this is a wave 1 with a sideways correction. Actually, it could be a triangle correction. Wave 3, wave 4, and wave 5. So wave 5 could be here. Let's put here quickly check out the lines. We don't know if this is finished. We're going to try and see if it's finished before a little further. So if we go to a daily, this is quite a complex correction. It went sideways for a long time. This is daily, so for some months it went sideways. Let's just, and here is when you know that you're on wave 5 and then wave 3. Wave 5 and wave 3 usually have divergence on MACD or on any oscillator. So you see here, price went up, price hit a top there, hit another top there, but actually on the oscillator, momentum came down. So this is an indicator that you have a wave 3 and then a wave 5. But this tells me that the big correction is yet to come, because this wave 4 is not a strong one, so the big correction is yet to come, and this is a first wave of a bigger wave. This would be the third wave of a bigger wave, and I'll show you on a lower time frame why. So divergence is if you want to trade ABC corrections, this is when you start looking at the ABC correction. So now let's go into the daily time frame and try and count waves inside the third wave. So inside the third wave, we had wave 1 here. This would be wave 1. Wave 2 around here would be A, B, C. Then wave 3 would be to this top. Wave 4 would be here, and wave 5 would be here. This is the waves inside wave 3. Be a different count. I'm not going to go into labeling and stuff. Just look. This has a circle. This has sidebars. So this is a major one, and this is a smaller one. So we now want to know what's happening here. And if you look here, you had another top, wave 3, wave 4, wave 5. And look what you had here, divergence between wave 3 and wave 5. Wave 4, for wave 4, you have to see a cross of the 0. So this is a wave 4, and then it starts again. To count the wave 4, I usually go into a smaller time frame. And let's see if I can do it here on this time. Okay. Look at this. If this is wave 1, and the drop is wave 2, and the high is wave 3, this is wave 4, this would be wave 5. Yeah, the wave 5 could be here. Wave 5 could be there. The thing is, this would be a truncated fifth. Is a fifth that doesn't go up. And how do you count corrections? This is a 4 crosses, so this is a 3. You see divergence? That's 5 of 3. Is this probably getting it all mixed? But this would be A, B, C. Then you on another time frame you'd have 1, 2, 3, 4, 5, and then on. But 5 can be here or here. it looks better on this time frame if it's not yet happened. Yet, try it. So now let's go into the 4-hour time frame and let's see. Start putting Fibos here and see what could be happening. We don't know if 5 wave is here or 5 wave is there. This is for sure an impulse. You see the angle and the strength. So this is for sure an impulse. So if on a lower time frame this was a fit, like we saw before, we would have on a lower time frame the 1, 2, 3, and 4. No, 5 would be here, so this would be 3, this would be 4, and 1 had to be lower. Okay, let's see how it would behave with MACD or with this awesome oscillator. Let's erase this. We would have wave 1, wave 2, okay, wave 2 there. This would be the correction. Then wave 3, wave 4, and wave 5. You see here again, between wave 3 and wave 5, what do you have? You have divergence. You're also going to have divergence on corrections, and we'll see that now. So if this is wave 4 of a major time frame, hitting that support level we drew on the weekly. I'm just gonna change these colors so that you see the difference. So this is wave 4. This is wave 5. It has 1, 2, 3, 4, 5, and this would be the correction. And how do I know that this is the correction? Well, I had the divergence on 5, and then I have the zigzag. A, B, C. And this cannot be a wave 1 because it goes below the start, so this would be still a correction. It would be another ABC. But you need to read stuff, ABC. Or maybe not. Probably, okay, what we have here is this. ABC. Here, Daniel, you have one of those little channels. Not here, but here you had on the on-wave C, you had the channel that could have helped you trade this. But we'll go into that a little later. Let's count this on the MACD. Or it's not MACD, but it could be, I don't know what Bruce got from the start. Bruce, awesome oscillator it's the same as MACD, the same as Elliott Wave oscillator. So let's count on the corrections. You have A, you could have ABC here, but I'm saying that all of this is B, and C ends up here. So this is wave 1 of 5. Oh, this is wave 1 of a new. This is wave 3 of a new wave. So this is wave 1. Wave 3, I don't know if it's it's already finished or not. Well, I'll try and figure that out. And how do I know if it's finished or not? I see the MACD crossing, so it tells me that this is a wave 4. So I think wave 3 has finished, and now we're on a wave 4, and we're going into a wave 5. And if you see here, even though you went up, momentum was going down. So this could be, and it's always could be, because ABC. And on the A, B, C. Does it make sense so far? Okay. So this is a zigzag. And how do I trade this? If I'm right, and we're going to go on to a wave 5, that would mean just I know, Bruce, you didn't see from the start, but these waves usually have Fibonacci ratios. Wave 2 usually comes down to 61.8, and I'm doing this on the fly, so I don't know, but I'm looking at it, and it looks like it's going to fit just perfectly. Wave 1 usually goes down to 61.8. Wave 3 usually is 1.6 extension of wave 1. And wave 4 usually retraces 38.2. So let's see if the ratios fit here. So if this is wave 1, where does it go to? 61.8. And if you had seen this, Daniel, this is for you, and you had put a channel here, would the break of that channel be a good entry? The break of the correction, would that be a good entry? Daniel, for you. Trying to, yes, it would be. But I'm gonna, I'll do the entries in a lower time frame later. For now, just keep on corrections. You enter on a break of something, or you need a trigger, and we'll get to that. Okay, so we see that wave 1, in fact, retraced 61.8. Let's see wave 3. How much did it retrace? Almost 38.2. I didn't write this. This was written in the 30s. And another rule, wave 4, or the big, you remember you have 1, 2, 3, 4, 5, and then ABC. ABC usually corrects to the wave 4 of the previous impulse. Let's go into a lower time frame and try and divide this. And there's another rule that wave 5 usually has the same length as wave 1, but many times it does not, from what I've seen so far. So if you had wave 1 here. This could be an extended 3 and then a 5. Different in the lower time frame to help. So I'd probably say wave 1 here. Wave 3 there. Wave 4 somewhere here, and then 1, 2, 3, 4, 5. Now I'm always looking down to see the counts. So back to the 4 hours. It did retrace almost to the 30. I didn't plan this. It just almost retraced to the 38.2 and also ended around the zone of the previous wave 4. Okay? So if I have here an ABC, and you never know if you're going to have an what kind of correction it's going to be. Is it going to be a complex or zigzag or flat or triangle? You never know that. So that's why I told somebody to not trade because this looks like a flat, because B retraces all the way up and then comes down. But then again, let's use Fibonacci ratios again. So wave C should be, before I do it, wave C should be let's keep that one. Wave C should be the extent, the 127 to 160, 160.18 extension of wave 1. So if we do this, let's see what happens. Wave B retraced 100%, and then I'm going to pull this over. So you have here a convergence of two Fibonacci ratios of the 38.2 of the big move and the 127 of the correction. So this would give you a zone. I'd mark the zone here of a possible reversal here. Let me read. Yes, there's. I'm going to get there, Daniel. Just I'm going to tell you what my triggers are, and just trying to make it all make sense. So we. Just shit, it's not how it's written. Okay. So I get a zone here. This is a hard one because this what this gives you is actually it gives you a channel or kind of a channel, and it's not as easy to trade as a zigzag. That's why we go into a lower time frame. And you're always thinking in potential moves. I don't know if this is going to go up or it's going to go sideways. So this is a potential start of a wave one, but it can still be a correction. But it's a potential start of wave one. So how would I enter this one long? This would be I'd need something else to get in this one long, because a hit is not enough for me. So let's go into a smaller time frame. This is an A, B, C, and I'm always saying if. And we have, this is a big impulse, but I wouldn't do it this way because it would be too risky. I do a small, lesser steep channel that this would help me reduce risk. If I have a big channel, that's more like an impulse. So I'm on the 30 minutes. I'm on the 30 minutes, and I have here a zone. And remember, you don't have that. You have this. This is what you're seeing. You don't know what's coming after. Okay. Okay, Daniel. Let me see. What do you mean? Daniel? Scroll right, this right, or just point. You can point or you can draw. You have control now, Daniel. Okay. Would I think that this would be a barrier? Is that the question? Would I think that this would be a possible reversal? Is that the question? Yeah, it could be. It could be. Well, you have aggressive entries and aggressive exits and conservative entries and conservative exits. I usually enter on the break, but that's an aggressive move. If you want to be conservative, if this is a 1, 2, 3, 4, 5, of the wave 5, as I think it is, that means you're gonna have like a 1, 2, 3, 4, 5, something like that. So I'm going to erase the zone. So I enter aggressively. I enter on the break. What does this mean? This means that my stop will be here. Somewhere around there. And I will not move it. Because if I enter here, I'm going to put this as a red dashed, and I'm going to put blue dashed where I would enter this. If I'd enter here, I'd either be entering on the break, not on the break of the channel, but I'd be looking to enter either on the break of this high. And remember, you have this blue dashed. I'd be looking to enter either on the break of that high or on the break of this high. And my stop would be around there somewhere. So if I do an aggressive entry, like this would be, this is news. I personally remove stops at news and then put them back in. But I don't recommend doing that. But it's what I do, and I'm not lying here. So I'm telling you, each one will have their own strategy. But why don't I move stops? Because I know that this thing will retrace back. And if I start trailing my stop, instead of having all this movement, I'll only have this. So my stops are always on the same place. I can move my stop to wave 2 once the market tells me that it's finished. And it's finished when it will break one of the lower highs that it's going to do here. So if it would do this, this, and this, when it broke the high of B, I could move my stop there. So this would be entries where I enter long. Another thing you can do to be more conservative is wait for wave 1 to finish and then enter on the break of wave 1. And you'd be entering there, and your stop would be there. Does it make sense? Okay, I'm on the 30 minutes, and this is where I mark the entry and the exits, the entry and the stops. But my exits are done on the 4 hours. So going back to where I would have entered, I would have entered on the break of that high, remember, or on the break of that high. And I'm expecting to be in profit for probably a day, and then not be in profit for a couple of days, and then start being profit again. This is because I'm trading off the 4 hours. If I was trading off the 1 hour, I would be entering there on the break of this. Instead of entering on the break of this larger correction, I'd be entering on the break of that smaller correction. But my target would not be the same as and my stop would not be the same as the 4 hour. So what am I aiming for? I'm aiming at the 127 extension of my wave 3. So if this is wave 3, I'm aiming there. I'm aiming to get out there. And what do I know that's going to happen there? I know that the MACD, or this was ABC, it will do something like this. Then it can cross 0 or not on wave 2. And then we'll do an impulse, and then we'll cross 0 on the 4, and then we'll do this. This should be a little to the right or left. Let's try and just try and okay, so wave 1 is probably not done yet. But what would this oscillator do? Come up to wave 1, then I don't know if it would. It probably wouldn't go below 0 on a wave 2. So it would come up. Then you'd have the impulse. Then you have the cross of the 0. Then you have another impulse. Then you have A, B, C. So I'd be targeting this area here, and I'd be looking, sorry, for divergence here to confirm wave 5 and get out there. So what would I have? And please don't go into this pair just because even if I got in there, stop there and exit there. Always exit a little before the price. So I'd have what, a 1 to 4 trade. Would it be good? I think it would. And why is it a wave 1 to 4 trade? Because this is a wave 5. Let's see if we had done this on wave 3, what the ratio would be. And let's count the things. Let's imagine we're here. Okay, I have here a zigzag, an ABC, A, C, and remember that I said wave 4 is usually a little sideways and wave 2 is usually a zigzag? Well, that's what you have here. And wave 4 usually extends more in time than wave 2. So if we would go to the 30 minutes on that direction, and we do that channel, and on the lower time frame, these are impulses. We would do the channel, and we would be entering on the break of the channel with a stop below the low. So if we would, and this is my entry, I'd be immediately probably not, because and on here and here I'd probably go to the 15-minute. Shit. So Daniel, here's the thing you're looking for. The entry on the break of structure. Here, structure would be B. It could also be because you have the C wave is a 5 wave, 3, 4, 5, something like that. You could enter there, but it would be very risky. I'd be entering, and remember, you don't see this. I'd be entering here on the break of B. And this takes days sometimes to get there. And my stop would have to be here. This is a big stop. Okay, so let's put it in red. So I'd be triggered in only about there. Personally, this would, well, Daniel, if your risk management doesn't allow you, you either reduce the lot size or don't trade it. Or if you think it's going to go up, you don't trade it on the 4 hours, trade it on the 1 hour. How many pips would this be? This would be, oh, it's not that big stop. It's not that, it's a small stop. So the entry would be on the break of B, but I would enter before because I'm aggressive, so I would probably enter here, and don't and be yourselves. I would enter there. And why? Because on this time frame, it gave me a trend line here. It gave me a channel. So if it broke this channel, I'd be going long. This is where I'd probably go in. But a conservative entry would be this one. So we're going in on either one. Both of these are break of structure. Depends on when you're looking at it. I mean, if I had set an order on Monday and gone away, I would keep it there. If I'd be looking at the pair, I'd be, and this happens a lot, I set the order and then price does it, I don't get triggered in and I keep looking at it, and then if I see I have a new high, a new higher high on structure, I'll pull my entry down. But my target keeps always the same. So my entry would be either there or there, and my stop there. And I'm trading wave 3. So let's go to the 4 hours and see where would my exit be on wave 3. And I would not get all of this because let's take this one here. My exit would be on the 1618 or 127. If you exit on the 127, you're always going to get it because it almost always hits the 127. But you could go to the 1618 on a wave 3. So what would my trade be? My trade would be, let's put entry there, stop there, exit on the 1618. Two to 4. What if I was looking at this? If I was looking at this, I could be counting the waves. And expecting for a divergence, just to try and get out on the end of wave 5. But if you exit on the 1618 on wave 3, it would be great. So the trade would probably be this. That you'd lose, but no, it would still be a good trade. And if you exit on the 127, it would be this. I wouldn't do this. I don't like one-to-one trades. This is 1 to 1.5. I wouldn't do this trade, but I would do this trade. Is it making sense? Okay, so let's go back to that little drawing I did before and see how it fits here with the channels. So we had wave 1 and 2 and then a channel. So we have this. Actually, wave 3 didn't break above the channel, but that's okay. And you could exit there, see? But I mean, this is one example. Many times what will happen is this. It will break out. This example works like this, but it doesn't. Usually wave 3 will break out of the channel and wave 4 will not let you into the channel, and wave 5 will not go into the channel. Okay, so let's go back in here to see what we have and if we see other patterns. Daniel said a double bottom. Yeah, we see. Do we have here an AB equals CD move? We don't. Let's see. Hey Pietro, if you need to go to the girl, go. I'm recording this. We don't have here an ABC. But what do we have here? And it's telling us to expect a correction. It's actually not telling us nothing. No, this is not a pattern. Okay. So, but let's put back that trend line and no, I was looking for harmonic patterns to show Daniel, but I don't see any. Let's see here if we have one here. No. No. Okay, but I see here a good example of another thing. This is not Elliott Wave, but well, it works. When you're into Elliott Wave, you can see that everything relates to Elliott Wave. Okay, imagine this trend line. This was news, but imagine this trend line. So this is a question for anybody who wants to answer, and I'll search for the same thing on another the same chart but on another area. So price is going around, hitting the trend line, going higher highs, higher lows, and boom, it crosses. What could we expect now? It crossed. If it crosses the trend line, it's either going to be a head and shoulders or a double top, usually. Let's put a fib level and use this one, for example. Let's keep this one, see how much it retraced, and then wait for, okay, retraced 61.8, and then let's do this. What do we have here? Well, we have, this is not a pretty one, but it's still, it would be left, head, left, head. Why don't I trade these? Because of this. Because usually it's a correction. And the thing the rules tell you that the target is going to be the head. Well, it sometimes is not. So you'd be trapped here. Yeah, that's why I don't. If you're Daniel, if you know where you're at in a Elliott wave, you sometimes you can trade this, but sometimes you will leave it alone. And why is that? Let's do a trend line here. So you have price going here, 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 here. Here. And here. Why don't I trade head and shoulders? What you sometimes have is that I'll put the labels on here. 1, 2. Shit. 1, 2, 3, 4, 5. A, B, C. A, B, C. So this is interesting, and try and follow me. You're looking at price bounced off the trend line. It broke the trend line. And you want to trade wave C. You don't want to trade wave A because you don't know if it's wave A, but you want to trade wave C. What do? You wait for the retest of that trend line. And how do you do that? Well, you put a Fibo here and you expect the bounce out of this zone. And you go into a lower time frame and you enter on the break of structure there. But what do you have here? You do have a head and shoulders. That's in fact ABC. But if you'd wait for the break of the neckline, you'd have about, in this case, you'd have a 1-to-1 risk reward if you hit the target. But if you follow the rules that say that the target is the same length as the distance from the neck, you'd probably get fucked here. So I don't trade this. I could trade wave C I could trade wave C. I could see, okay, it broke, did the head and shoulders. I would only enter the head and shoulders before it was head and shoulders. I could enter it there on the break of structure and then target the 127 and exit here. Let's see on the chart. Let's see a head and shoulders. Well, you see here, you had a big one and it went nowhere. Here you had a big one. And it went nowhere. So the only way I trade this was, I'm going to try and show you, probably on a lower time frame. Okay, let's see. How is this? This doesn't. This the double top there. Well, I'm not getting on this chart, but anyway, let's try and talk a little bit about volume. I always have volume here. These ups and downs are the days. So this is one day. This is an Asian session. That's probably a Sunday. This is Asian session, news on Asia. Asia, news on Asia, Asia session. So this doesn't tell you much, but this does. If you're thinking, okay, price is going up on the daily. So if you go on the daily, you don't have those ups and downs. So, okay, imagine you're on the daily. You see here, price is going down. And this is a question for everybody. If price is going down, so if price is going down and volume is going down, what could that mean? Anyway. Yeah, less interest. There are less and less. There is less and less interest on the downside. And what do these two spikes mean? Usually, when you have a trend, to stop that trend, you're going to have a spike. See here, you had an uptrend, and it stopped there, and it stopped. This is a daily bar. It stopped with a small bar, but with big volume. See here? So that stopped the move. And what was this? This spike was probably people getting out of the people covering their longs. And let's put in on the 4 hour and see where did they cover their longs. They covered their longs on the well, around that, around the 227. This says 127, but it's 227 because the 127 is this one. So they cover their shorts. Volume helps you get a feeling for what's happening. Are people going short? Are people going long? What's the most likely thing to happen when a spike occurs? Here price is going sideways. This is that big ABC correction, and volume it's almost the same. But you see here, when price starts going up, volume starts going up again. So this would be what Wyckoff would call an accumulation area. And what is an accumulation area? This would be the accumulation area. Yeah, you can say consolidation, but this is where people got out here, around here, and here, and this is when what Tom Williams calls the smart money. This is when they start buying. So price starts moving in a channel while they are buying, not trying to show anything that they're buying. And then price starts going up. And volume goes up. So this helps you get a feeling of does it make sense to go long here? Price is going up. Imagine you're there. Price hit a low. So price was going down. Price was going down here. You see how small the volume is compared to the rest? There's no interest in the downside. So smart money here is trying to buy to buy all the sellers. And the sellers are fewer and fewer, and it gets to this point, and there are no more sellers. So price starts going up. What happens here? Price stalls. You have a correction. Sometimes you'll have an up move also where volume is decreasing. I only see that when you don't have any support or resistance, and people are just uncomfortable, and price has nothing to hold it back. So just keeps on going and going. Well, any questions? Would yeah, it's tick volume. This is tick volume, Daniel. Yeah, there are counter wave trends, but if you go into a smaller time frame, corrections are actually smaller trends. For if you go to the 30-minute bar, the chart. This was a great trade for someone that trades out of the 30 minutes, and this it is in itself a trend. It's a correction on a larger time frame, but it's a trend on a smaller time frame. Does that answer? So this is where you need to find your personality and see how much money do I have, how large stops can I be looking for, how much time do I have to be trading? Do I have the whole day? Do I have as many of you know, I do architecture, so I like to set the things. I have the second screen with the charts. I do architecture on the first screen. I do both things at the same time. So the 4 hour is better for me, and I can go with 100 pip stop. I've been trading with very small lots, so I can go with big with a big stop. I mean, I could probably do a trade like this, like a big stop like that, but my target would be very far away. But that depends on your personality. Do you want to be into the market? I mean, I put about, I don't know. I'll show you my journal. Well, it's the end of the month, and I have about 30 trades this month. So it's about one trade a day for me. All of them are still open, except 2 that got spiked. Well, this is my journal. I have the date, the time, the pair, the size, the direction, if it was market or limit order. I have several brokers. This is the 1/400 broker. I put in the wave count candlesticks when I'm getting in with that reason. The fib retracement and the fib extension when it's an ABC correction. I can put if there was a divergence. I can put if I'm entering because of the retracement or a fibo. If volume is decreasing or increasing, if there was a triangle, a Gartley, a ABC. I'm entering here on the wave C break. I'm entering on a low break, on a high break. This is my entry. This is my risk reward ratio: 2 to 9, 3 to 8, 1 to 3, 2 to 7, 1 to 5. This is more than 1 to 10, so it just puts in here. Both of these entries I entered again after being spiked out. So you do see here a one-to-one trade, but this is two trades are one-to-one. This is an add-on. I've been on this pair for some time. 1 to 6, and these two are more than 1 to 10. So my ratios, any win will make up for a bunch of losers. And well, this is the blank sheet. What do I do here? I put my trading view and analysis, and I link it. So in any pair, I can go in and see exactly what was I looking at when I entered that. So I just pressed a random one. Okay, so I was looking for it to break these two lines. The first one, you see here, Daniel, try and imagine this is 1, 2, 3, 4, 5. That was what I was looking at that moment. And my entry would probably be here below this low. So let's see what happened. It hasn't triggered me yet. It probably just triggered me now because I moved up my, like I said before, this is Australia, New Zealand. It just triggered me in. My entry was here before. But then it did another, are you understanding this, Daniel? This was my 4 on the first count, but then it told me, no, this is a 4 of 3. This is the 4. This is the 5 of C. So now we're going down, and I moved my entry. It was here before, I moved up. So I got triggered while I was talking to you guys. So this order, just today is the 30th. This order has been waiting for 7 days. Does it make sense? Have patience. I've been sitting on this order for 7 days. So, and if it hadn't triggered me in, well, I'd never win, I'd never lose. Where's my target? If this is a wave 1 and this is an ABC, and here I don't know what disappeared. You see here, Daniel, if this is an ABC and this is a wave 5 of C, wave 1, the 1 ABC, to count to count this. To count corrections, you usually need to go into a lower time frame. But if this is my A, B, and then C, 1, 2, 3, 4, 5. Let's do the count here. This is my 1, 2, 3. This is 3 of 3, and this is 5 of 3, so 3 ends there. This is 4. Remember, 4 crosses the 0, and this is 5. You have here price going up, and you have here divergence. So my entry was there, but then I moved it to there. And back to the question, where is my target? My target is at the 1618 of wave 1. So if this is wave 1, my target is there. I also have this trend line here. With this kind of channel here. So I have two things telling me to get out here at this moment. That's the fib level and this channel. Remember, guys, I told you when waves start, the first channel you do is from the beginning of wave 1 to the end of wave 2. So this is that channel. Wave 3 can go down. It can go down. I'll be looking at that later. But does it make sense? Okay, so this is where I went in. If it goes below this blue line, I'll be comfortable. If it breaks this other blue line, I'll probably add to it. And if it breaks this low, I'll be very comfortable. I know, okay, I'm in a good place. And I'll probably only move my stop when it breaks this line here, when it breaks this low. Until then, my stop's going to be there. And I might either going to win this or lose it. But for now, what I have is this. My stop is somewhere there. My target is somewhere there. Before the 618. So I have a 1 to 4 trade. How long does this take? I don't know. Let's see on the. I don't know how long this will take. It will take a month, 23 days. That's a month if it gets here. It's a month because you only have 5 days of trading each week. So you have 22 days. So this is a trade that's going to last a month, or I'll be taken out earlier. But what do I know it's going to happen? I know probably not today, but I know on Monday I'll be, and here I can kind of show you what I was trying to show you before. I entered here, but I know that Monday and Tuesday I'll probably be negative. That's because If this is wave 1, it will retrace, and it will do a head and shoulders here. So if I had this trend line here, I know at some point price will come back and retest that trend line. I don't know where the bottom is yet, but I know when it hits bottom, when I see a bottom, I'm expecting price to retrace to this area here, if that would be the bottom, yeah. So I know I'll be in the red, but then I'll probably be in the green. So I entered there because of that break of structure. I could have more patience and wait for this retest. That would probably be good. So I know price will do something like this, or something like this. That's why I don't move my stop. But well, that depends on the trigger. If you enter on the break of structure or you wait for the retest, as I told you and you guys saw, I'm trading very small lots. I'm trading. I have a. If I told you, you wouldn't believe, but I have many trades opened, and I keep adding to them. So I don't mind waiting for 5 or 6 days until it crosses. But also it can do this, retest that, then go there. So that depends on your personality. It can either go here, retest that, and go down. And either way, what you'd have here would be a head and shoulders. But this is a head and shoulders, not on the correction. So this I'd take. I wouldn't take a head and shoulders on the wave 5 and then the ABC, because that wouldn't be wouldn't give me enough risk. I have a chart. I don't know what chart it was. It was some NZD thing. You see here. Okay, here it is. Okay, how they see CHF. So this one I'm in, and you see, I didn't go in. I because of a head and shoulders. In fact, I said don't go in. I go here. Oh, this CHF 14 days ago. That's okay. You have a head and shoulders, but it's going up, and that's what it did. And again, if I go on the break, I'm going to wait for the retracement. That's okay. I don't mind. But many people just take this impulse and then try and get in there. I just don't have the time to do that. Daniel, no, I have not looked at the Fibonacci spiral. I mean, I've seen it in the books, but I think it's just a pretty thing. do want to show you something that's really, really, really funny. I don't know why on last Friday, 7 days ago, I posted this chart and I wrote, I do not expect price to go any lower or much lower than this. And immediately people started saying, never. And I said, I don't understand, never what? This guy, I don't know him, but just keep away from him. You see, he doesn't even have one published chart. And well, if you scroll down, this guy gets really. Yesterday I told you something that if you guys want just to read the things, then it's this guy is going low because of price was around this area in 1996. So and I've been looking at his comments on other charts, and for 1 month, he's been looking to go short. I don't know if he's trapped or something, but I said price is not going to go much lower, and then it didn't. Then it retraced, as you would expect. This is wave 1, 2, 3, 4, 5, 3, and then this is going to go much longer. But yesterday price came down on because of news, or 2 days ago because of the OPEC news. So the guy started saying, "You're pipless, ha 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 ha." But well, I'm very patient, so I'm waiting to get back to him. I don't know if this is still a correction, like I posted here, an ABC correction, or if it's already a wave 1. I do have an open mind, so I don't understand this comment. Now you change your initial plan. Of course, I'm always changing my plan according to what the market is telling me at the moment. I don't force anything. If the market tells me I'm wrong, I'm wrong. But I don't. I mean, I don't think I can predict what's going to happen, like for the whole month. I mean, here I know it's going down, but I was expecting here some resistance or some support. It went through it. It did retest it. I'm still waiting to see what happens when it gets to this bottom of this channel. But if you go through my charts, many, I don't know how many, but many do actually do for a long time what I think they're doing. And that's why my trades take so long. I've been in trades for 2 months, some of them. So the first chart you saw, this one, I'm just saying, okay, it's going down. And then the next chart, I saw a double head and shoulders. Here, 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 and here, here, here. Said, okay, it's going to do a double head and shoulders, and it did. See how it did? So this was a pretty comfortable trade. You had this bearish butterfly. You had the double head and shoulders. You had the break of this channel. You had many things saying go short. So I just added. I added here. I added somewhere here. I don't know how many. I have about five positions on this pair. I also have, I think, 6 positions on GBP starting maybe a month ago. No, I think I started here 2 months ago. But this was 19 days ago, so it broke, it retested, it still told me the same thing. It's 1, 2, 3, 4, 5. So I added in again, and then I added in again a couple of days ago. So I've been adding along the way on many pairs. Questions? Anything that I can answer? I have to drink and lunch soon, so. Yeah, that pair was no, I can give you guys 20 more minutes. Anybody has any questions? Crazy questions? It's I'm more of a wine guy. Okay, just a quick thing. This would have to be done on the weekend, but a quick thing so that you know where I feel stuff. I don't look at news. I do have always here. I take my stops out at news, as I told you, and put it back in a couple of hours after. So it really doesn't matter because it's not going to change the trend. It's just I've seen it many times, either with interest rates or Fed announcements or non-farm payrolls. You'll see, and it's interesting if you guys go back. Or even on the S&P, you're going to have the news. You're going to have something like this, and then an hour passes and it continues like it was before. So I don't avoid the news. I just don't let my stops on big news. Not all the red news are big news. You have try and understand fundamentals, just so that you have a global notion of what the market is doing. Imagine imagine that you have the other day you had American oil. What do you call it? The oil something. I'm missing the name. Well, the U.S. has an announcement on how many barrels of oil they have on stock. Basically, if it comes down, that means the U.S. economy is good because there are more people consuming, more cars on the roads, and more factories consuming oil and oil-related products. So a decrease in oil stocks is good for, it means the economy of the US is good, but it doesn't affect much the dollar. It affects more the Canadian dollar. And that's because if oil stocks in the US are low, that means the US will have to buy more stocks, and that means that they'll have to pay Canada for stocks, so Canada prices go up. So just to give an overview of what I do on the weekend, I start by analyzing the dollar index to see, well, is the dollar going up or is it going lower? And well, for me, it's going lower. That's why I'm going long on EuroCAD. Okay, I note this. Where do I think that the dollar is going? Then I see oil. That helps me predict where Canada is going. If it's going up, I know Canadian dollar will go up. Also, I look at gold, and if gold is related to the Swiss franc and to the Australian dollar, so if gold is going up, I expect Australian dollar to be going up. These are the first 3 analyses I do on the weekend. I don't trade them. I just use them to have an idea of where the dollar is going, where the Canadian dollar is going, and where the Australian dollar is going. And then, well, I do the S&P, also the Dow, but then I start going through all my pairs. And if I think gold is going up, I'm betting on a long Australian dollar. And this is what I've been doing for a couple of months, except the yen. Every pair tells me yen is strong, so I've been shorting any pair that has the yen. New Zealand looks strong also, so it doesn't mean that gold is going up. I go long on every Australian dollar. I think I've gotten to a point where I can go through the 28 pairs I look at, and I have a feel. Okay, New Zealand is strong, the yen is strong, and the euro is getting stronger. So I trade around that, and it's not just getting stronger. Is sometimes you have a pair that's getting weak, and you try and understand is one currency weak or is the other one strong? Because it's very different. You can. I mean, I've been betting on a weak pound for 2 or 3 months, and it's been very profitable, as you saw on the pound dollar and on the pound yen. So the pound for me is weak, but then if it moves up, what does it mean? Does it mean that it's stronger, or does it mean that the New Zealand is weaker at that moment? So that's something that's not in the books. You're going to have to spend a lot of hours looking at these things, trying to see how they connect to each other. If, like the other day, the yen went up. This is the daily. 2 days ago, I was losing a lot of money on my positions because of the OPEC thing. But my aim is at here, so any news that happens here really doesn't matter because my stop is there, and I'm looking to get out here. So how does the OPEC affect the yen? You guys ask. Well, Japan doesn't produce any oil. They consume all the oil. They're big consumers. And they don't produce any. So if OPEC reduces or halts their production, that means the Canadian dollar will go up, but also it means that Japan will have to spend more money to buy oil. So the yen lost strength for a couple of days. But if you understand this thing, you will not be scared if you're short. You will not be scared if for a couple of days it moves against you. I mean, I think that's a lot of information for one day. I don't want to get you guys mixed up. Well, I hope this was instructive. And that it was helpful. And again, let's see here. I know this is, I think this is a wave C. I know this is 1, 2, 3, 4, 5. And what do we have here? Just the same thing I told you guys before. A wave C is a 1, 2, 3, 4, 5 sequence. So what do we have here? Again, let's count here. Have 1, 2, 3. This is the 4 of 3, 5 of 3. So 3 is here. 4 and 5. And what will we have here? Around here, we're going to have price going down, and we'll have a divergence here. That's when I'll be getting out, around here. Maybe there, I don't know, when it tells me. This, if there's any secret to counting the waves that I could tell you, or something that is this. Wave 4 crosses 0, and you have divergence between wave 3 and 5. But what is this divergence? You guys are looking here, see this is 3 and this is 5. I say this is 3 of 3 and this is 5 of 3 because inside here you guys have another 1, 2, 3, 4, 5. So this is 3 of 3. Put it here. This is 3 of 3 down here. This is 5 of 3. You see, it didn't cross 0, so that's not my wave 4. That's my wave 4. You're going to see this. Try and look for it. Try and use either the MACD or the Awesome Oscillator, or well, anything you want. Even in the RSI, you'll see stuff like this. For me, this is the easiest one. And so if you look at this, this will be 3 of 3 or 3 of 5, or it depends on what count you have. And this will be 5 of a major impulse, and this will be the 4 of that impulse. Is it clear, guys? I'm sure it's not, but so this is would be 1, 2, it didn't cross 0, 3, 4, and 5 will be somewhere around here. And remember, here we have on the lower time frame, if we go into a lower time frame, this 4, we had our A, B, C. Well, this is just the beginning, right, Daniel? Well, I just gave you some things to help you if you guys want to count waves. And I'm trading off the 4 hours, so I do basically I analyze the weekly and the daily, and then count the waves on the 4 hours. Yeah, well, something you guys remember I did here support resistance. This was just I don't use horizontal support and resistance, and this is why. If you guys just do any lines anywhere randomly, you're gonna see prices hitting there. You can see, oh, here was support, here was resistance, here was resistance. It was a random line. This, oh, here it was resistance, then it broke, then it was support. It was a random line. Here was resistance, here broke through, here it was support, here was resistance. It was a random line. The same here. I put the lines randomly. So I don't use horizontal lines. That's why I think that crazy guy on the New Zealand CAD it's talking about price in 1996, where there were no computers, there was no Globex market, or people were just starting to trade online, and there was no euro. There was, well, it was different. There was, there's been a lot of inflation since then, and plus, we don't have the chart. It doesn't give us enough, but I don't know how he was looking at the monthly. Basically, he's saying price will not go up because this is where it's stalling. The fact is that price is trying to break, and it's been hitting this area for 1, 2, 3, 4 times, and the more times price hits some area, the more easier it will be for it to get broken. So well, I hope this, in fact, what I think on a bigger time frame is that this is a triangle 4, and the bigger 5 will be coming around. This is on the monthly, so but that's too far away because that's 2 years from now. So Well, if you guys don't have any questions, we'll make it a wrap, okay? Hope it did help. If you guys have any questions, well, I gave you my Skype or chat with me either on Skype or on TradingView. If I'm home, I'll reply. So feel free. Yeah. I'm not here to take anybody's money. I just like helping. What goes around comes around. So if everybody around me has success, I don't have any choice but to have success as well. Okay? Chat later. Okay. So bye. Have a nice weekend. I'm not trading today. My trade was triggered in. So hope it helped. Bye-bye. Just have to know. Location. I know it's still open. I just don't want to close it before I know where the file is. I never recorded it. Does anybody know where the file goes? Okay, I think it did. So bye bye, guys.